Hello everyone and welcome to Day Trader S&P 500. It is Sunday morning, June 29th, 2025. This is Dale Woodson, editor of Woodson Wave Report and this YouTube channel. I want to get you guys caught up. It's been a while since I did a report, and it might be the longest time between reports, but try to get them out there a little more frequently. I want to let you guys know about our auto trades. There's our three systems. We added the U.S. 10-year treasuries to it, the bonds right here, and we'll get to that in a little bit. Let's go get you guys caught up on the big picture, all the way from the big weekly, monthly chart, if you will, down. Work our way from top down. Okay, this was a report we put out to our annual subscribers Friday. Okay, or Saturday. Take you back. There's our systems there. Triggers and target systems. There's the bonds, the ES, and the E-mini micros. You can track our trades there. Here's our most recent trades, Thursday and Friday on the ES and the micros. Okay, how the system works. The developer is me, Dale Woodson. Trading system, we use triggers and targets. Using the Fibonacci extensions and ratios, and of course Elliott waves. Use the money management strategy, Ryan Jones fixed ratio, which limits our losses to 5%. And when trading, it's important to have a trading system, which I have as the Elliott waves and the Fibonacci extensions. More important is a money management system. If you don't have a money management system, you're more than likely to run out of money. Okay. How it works: you open a futures trading account with Striker. They are a futures broker. I am not. And then you open an account with them and they trade my trades in your account. There's our disclaimer there. And let's get to the long-term count, weekly S&P 500 cash. Okay, we did have two different wave counts up there, a bearish and a bullish. We've eliminated the bearish count with the move to new all-time highs. You might be able to see with that last black bar up there. So the bullish count in purple remains. Okay, from that pandemic low, we had that expanding triangle. All the time when we get a triangle, we get a thrust out of the triangle, which was up here to the wave 1 low at 48.18. We had a wave 2 down in purple. And then from there we had a 1, 2, 3, 4, 5 up for wave 3 in parentheses. And you can see the targets there and the actual there. And this was the key back in April, that big decline. Okay, 4 should not go below the wave 1 high. The wave 1 high was 48.18. The low was 48.35. And the 50% retracement of this third wave right here was 40. It should be 48.32. I believe that's a typo. Okay, anyway, it hit right on the Fibonacci 50% retracement, a direct hit. Yeah, that is a typo. And then since then we moved up to all-time highs, which eliminated the bearish count. So that's the long term. This is a weekly bar, and you can see 5 equals 1 here at 74.61. Of course, it won't go straight up. There'll be ups and downs, but we'll get to that when we get to the smaller degree of trend. This is the biggest one. We have a monthly, but it's the biggest one. The weekly, it shows the same thing. Basically up from that pandemic low. We got a 1, we got a 2, we got a 3. 4 is complete. We know it's complete because this moved above the wave 3 in parentheses high. So 5 up in parentheses is in play. Okay, there's all the verbiage of all that. Okay, we removed the alternate bearish count. Any declines from current levels should hold above that 48.35 low. Okay, let's dig down. Oh, there's all of our Fibonacci time spirals. We might save all the details of that for another time. I do want to mention, and I think we write about it in here, we have a July 13th turn date coming up, and then 2 different spirals pinpoint July 28th. These have been pretty good. The slippage here is minimal at best, so we'll see what those things bring. And there's the other one on July 28th. You can see this 1 day, 1 day, 2 days, 5 days. Those are all Fibonacci numbers, by the way, 1, 2, and 5. Okay, and here we go with those Fibonacci time spirals, and this is a couple of them combined, but you can see it hit all these before the February 19th previous all-time high. It didn't catch that, but it caught a lot of the highs and lows in between. You can see it's catching these here. We have a ton of open gaps. I think there's a ton, 6 of them to be exact. There's that most recent all-time high on Friday, the 27th of June, okay? And this talks about the highs and lows and alternating. I might as well go ahead and read this. The next turn date is July 13th. That Fibonacci spiral has been catching alternating highs and lows. If it does, then if it continues, then the next one should mark a low on 7/13, but it might just be a low of the most recent 5-wave up at a lower degree of trend, and we'll get into that later. We'll identify that. Okay, here's the hourly on the S&P cash from the April 7th low, a 1, 2, and a 3. There you go. The wave 4 targets you can see right there. Any move above the wave 3 high of 61.47 means either the third wave is extending right here, or the fourth wave is complete. Of course, for the fourth wave to be complete, we need to see a move down first and then a move up. So we always have our upside and downside parameters to the 100th of a point, and this one on the S&P cash to the 1 point. Okay, I think that's more verbiage there. There's those retracement levels there, starting with 57.49 going to 53.26, and a move below the April 7th low up here means that this move down is correcting more than this 5 waves up here for wave 3. Okay, it's correcting more than the third wave, is correcting something bigger, which would be on a higher degree of trend. Okay, here's the 10-minute chart. This is from the 523 low. We're digging down. This is a 1, 2, 3, 4, 5. So on that small degree of trend, here are retracement targets from the May 23rd high to the most recent high, which was Friday. And there are the targets there, 60.94, 60.65, 60.36, 59.95. A move below the 523 low means that this is correcting more than that most recent 5-wave high, and 5 waves up, and a move above the 61, 87 high means that this wave is extending or this decline is over. Again, we have our upside and downside parameters, as always, at every degree of trend. In this case, going from the weekly to the hourly, daily to the hourly to the 10-minute. Okay, that's it on that. We get the NASDAQ here. From the pandemic low, we got a 1 up, a 2 down, and a 1, 2, 3, 4, 5 to make the larger degree wave 1. Okay, we have a retracement in wave 2 with a circle. It came right near the 618 retracement level. Wave 3 in a circle equals wave 1 in a circle at 24,899. Okay, that's what we're looking at there in the NASDAQ. There's all the verbiage there. Okay, any declines should hold above this low. Okay, again, we know to the 100th of a point or the 1 point where it is wrong. We always ask ourselves when we make any trade, any chart, where is it wrong? It's the first question we ask. That becomes our stop or our make or break point in these charts. Here is the Dow from a little more recent low, October of 22. We have a 1 up, a 2 down, a 3 up, a 4 down. That key level was broken there to the downside, which made this a 1 down and a 2 up. The Dow's lagging. It hasn't reached new all-time highs. Its all-time high is still in December of last year. Okay, so until that is broken to the upside, that 44,550, the 45,073, then this is a bearish count. It has not been eliminated. We have a 1 down and a 2 up. Okay, there's where 3 equals 1 at 35,504. It equals 1618 at 30,275. And the retraces of this move up from October of 22 to this wave 5 high are right here. The 382 it has achieved. The 500 it has achieved. It's sitting between the 500 and the 618 right now. That low is right in between at 36,611. So we'll have to watch that play out. Again, the Dow is diverging and it is lagging, and it has not made a new all-time high since December of 2024. There's our verbiage there on that. Let's take it to the bond market. Probably my favorite market, maybe because I've had so much success over the years and recently. From this wave 2 low, which was a direct hit, we have many direct hits before this. We have a 1 up at 4.806%, a wave 2 down, which came within 1/1000th of a percentage point of a direct hit on a 786. That was the 2 down. From there we have a 1 up at 4.590%, a 2 down at 4.124%, which was a direct hit, as was this Fibonacci to within this Fibonacci 786, which again was within 1/1000th of a percentage point. And then we had a 2 down. We have a 1 up in red and a 2 down in red. So we have a series of 1s and 2s. There's a 1 with parentheses, 2 with parentheses, a 1 and a 2 in black, and a 1 and a 2. A series of 1s and 2s, which means if this count is correct, we're going to get a wave 3 of 3 of 3. Let's go from the smallest degree of trend, which is this 1 and 2. It's actually there, but I haven't dug down that deep. This one here at 4.590 and the 2 there. 3 equals 1 at 4.854%, and the larger degree wave 3, there's a 1 parentheses 2 in parentheses, that's intermediate, is 5.044%. Okay, the move above this high gave us that upside trigger. This low gave us that upside trigger. Going back, this upside trigger gave us that target. We can get into these a little more detail as we look at these triggers and targets in the bond market. Okay, there's where wave 2 here scored a direct hit within 1/1000th of a percentage point. Wave 2 down scored a direct hit. That's that one right there, 4.124 and the 4.139. 3 up is in play. Where is it wrong? A move below the wave 2 low. Okay, so that's that wave 2 low at 3.86. So where is this move up wrong? If it goes below here, and that's what we got here. Wave 2 down, nearly touched the Fibonacci 786. There's all of our triggers. We've got a lot of triggers and targets going back in the bond market. A lot of direct hits. Anyway, love the bond market. Moving on to gold. Gold, we're looking at a daily bar on this most recent 5-wave advance. Okay, we have a 1 up, a 2 down. Both of there was direct hits here, and then we had a 3 up and a 4 down. There was an upside trigger there when we got through there, and then we have 4 of 5, and we're looking at 5 of 5 targets, and we had 3,500 was the actual high. Here's the retrace, and we have an A, B, C. Looks like A down, B up is complete. C down equals A at 3077. Might get on the real chart and look at these numbers. Are really small to see, but the 382 is 3132 of this advance here, right here. 382 is 3132. 50% is, looks like it's 30. Here, let me just make this bigger. It'll be bigger than the page, but so what? There we go. It's 3018, and 2904 is a 618, and 2743 is the 786. There we go. That might be a little better for you guys. Let me knock that back down. There we go. I think that might be it there. Yeah, there's all those targets right there. There's the wave 5 up targets. It went above the 1.0 and the 1618. Did not reach the 2618. It made 3,500 back in April, and the retracement targets from that high are right. Well, I had them right here. Didn't need to zoom in, but anyway, there are the targets there. It went between the 382 and the 500, and that's where C equals A, which looks like what's going on. So we'll see how that plays out, and there is the verbiage and all the triggers and targets on gold. Okay, I think that would do it for all of the stuff from our monthly report. Let's look at our charts here. See, I'm going to look at this. Did I get this? Yeah. Let's look at the charts here. Give me a second. I wanted to show you guys the auto trades. Here's the auto trades right here, and when you click on it, it'll take you to the landing page for our system, triggers and targets micros trading system. And then, like I said, I've got the macros and the bond market right there. There they are there. Okay, let's look at this chart. I'm going to look at the ES hourly if I have it here. There's the hourly. Okay, this is from the May 23rd low. Let me make that a full screen, make it even better to see. There we go. Okay, so we have a 1 up, a 2 down, a 3 up, a 4 overlaps the 1. That makes it an ending diagonal triangle. And then we have a 1 up, a 2 down, a 3 up, a 4 down, and a 5 up. Okay, we had a target, 2 different targets at 2 different degrees of trend. The one was 62.10.50, the other was 62.30. It hit a 62.37, I believe. We can do this live if I can. Let me get out of that full screen and go over here. And let's do a Fibonacci retrace if we can. Bear with me while I get this going. Let's go from that. Let's put that magnet on so we get it exactly correct. There to that high there. Okay. So if this 5 waves is complete, the most recent 5 wave advance, we have a retracement target of 382 is 6052.75. 50% is 59.96 and a quarter. 618 is 5939.75, and the 786 is 58.59. Okay, if it moves below this 57.56 low on May 23rd, that means it is correcting more than this most recent 5 wave rise. If it moves above the 62.30, it means this wave is extending, which means this 3rd wave is extending, and the 4 will be somewhere up here. But this wave up is extending. So either the 3rd wave is extending higher, or this 5th wave is extending higher. More likely the 3rd wave would be extending higher. Okay, and let's take you guys back. We'll go with the weekly log chart on the S&P cash. And again, this 48.18 wave 1 high was huge key support. And this April low, April 7th low, needed to stay above that for the bullish count, and it did by 17 points. Okay, let me see. I just want to change this here. Let's make this right. It's not, let's get into here. Bear with me, I'm clicking on the wrong one. Let's click on here. And, okay. Let's try one more time. How about, here, let's move this out of the way. I want to fix this for you guys. That's 48.32. There we go. Error repaired. And move our direct hit up there. Again, to the point, 48.18 was a huge level of support. A move below it confirmed the bearish count. If it held, it made the bullish count the primary wave count. And the move above this wave 3 high here on the 27th of June, which was Friday, confirmed the bullish count. Okay, so again, where's it right, where it's wrong? We know the bearish count was right with a move below 48.18, okay, and it held, so it eliminated the bearish count with a move above this wave 3 high, which also was the point where the bullish count was confirmed. Again, we know to the point, or if we want to get it down to the 100th of a point, which is a penny, we know to a penny or to a dollar where it's right and where it's wrong. Again, the first thing we ask ourselves is, where is this wrong? And that's obviously where we put our stops. If you were playing this very long term, you would have put a stop below here and you would have been rewarded. Okay, if you were playing the bullish. Okay, in a bearish, you would put a stop above here and you knew when you were wrong if you were playing the longer term. Okay, there were a lot of course, individual bullish and bearish counts in between here, or plays, which we use our smaller degrees of trend. This is the largest degree of trend, but we also use the monthly, which basically shows the same thing. Okay, but this is the expanding triangle wave 4, and this is the count from there. 4 is complete with that move above 3. 5 target is way up there. So yeah, long term, we're definitely bullish with the market new high as of Friday. We'll see where this goes. It won't go straight up. There will be contractions along the way. Okay, we'll leave you guys with that chart there, and make it full screen. And there we go. And that's it for this time. I'll try to make some reports more frequently going forward. Until next time, take care, everyone.